Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 8th of May 2026. The first chart is the S&P ASX 200 index. This is the XJO, the parent index of the Australian Stock Exchange. And the market continues to trade in consolidation mode within the range of this up bar in the background. We had strength emerge down here after some weakness came in, and after 3 weeks of consolidation, the market did push higher, and since then the market's been trading in consolidation mode within that bar's range. This week the market did trade below the previous bar's close, testing for supply, and then in response it attempted to move higher, and there is still some supply in this market, and the market's still jittery and nervy. It's reacting to news events and overseas trading to a large degree, and that caused the market to pull back for a mid-bar close at the end of the week. There's not a huge amount of weakness in the trading this week, but also there's no great strength being shown either. Sideways is the most obvious at this point in time, and I expect the market will continue to be highly reactive to what's going on around the world and what's going on in overseas markets. This is the ASX mid-cap sector. They look a little stronger or less volatile than the parent index, trading within the range of this stronger up bar after the initial strength emerged. Breakdown lines up here. The market did test for supply below the previous bar's close before just floating higher. The supply that emerged in this market was nowhere near as strong, and effectively you've ended up with two tests for supply, one after the other. This market is more likely to continue sideways, same as the parent index, which is what you'd expect. The small ordinary sector. The small ordinary sector has got the breakdown line above like that. This market continues to trade within this bar's range as well, and effectively two tests for supply. This market looks more like it's going sideways, along with the previous two. And the next chart is the ASX financial sector, easily the largest sector on the Australian Stock Exchange. We've seen for some time now that there's been supply drawn out when the market moves above the highs of the range. In response, the market's come back to consolidate, and there's been demand at this level, or sufficient demand to avoid a further breakdown. That leaves the market trading sideways just below the highs of the range. This week, the market attempted to move higher in response to the test for supply last week, but there was supply drawn out, and that caused the market to close just a little below mid-bar, but remain within the range of this previous down bar. Volume was also just a little below the average, so it wasn't overwhelming volume. That will allow the market to continue to trade sideways at this current level in consolidation mode, I expect. This is the ASX metals and mining subsector. The market moved higher this week. It did test for supply below the previous bar's close, which many markets do, especially early in the week and especially in Australia while we wait for overseas markets to open. The market then pushed higher in response to the test for supply, and it's closed pretty much up at the highs of the range. The breakdown line is well below here. The market has closed above that for a considerable amount of time now, and this market looks well placed to challenge the highs of the range and attempt to push higher. The ASX gold sector is trading very similar to the price of gold as you'd expect. There's the breakdown line in the background. Some strength was found at the lows down here. In response, price pushed up to that breakdown line. There was a period of consolidation in response, and even a little weakness emerged here, and price closed below that bar's low, but it did recover this week, following a little testing for supply here. Then it's floated up, and it's closed just back within that range again. There's no great intent being shown in this market. It's more likely to go sideways than higher or lower at this point in time. It will follow the price of gold to a large degree, as you'd expect. This is the ASX energy sector. There's some profit taking came out of this sector this week. We've had a pretty good run higher over time. The market was attempting to consolidate sideways, but we saw some profit taking emerge this week. You'll note that volume was actually reduced and well below the average, and the market has closed lower and below the lows of the range here. And that suggests that some people have just decided to get off this bus now and take their profits. And there wasn't a great deal of demand in the market, and that forced price to really stretch lower in order to find sufficient buyers to satisfy the sellers. If the sell-off continues, this is the next lower level that you would expect the price to come to. I won't be surprised, considering the market was forced to stretch lower to find buyers, that once that selling pressure has reduced, the market will probably come back and close back at this level relatively easily. This is the ASX healthcare sector, which has continued to sell off for some time now. Price continues to move lower, although it does appear the thrust has shortened to some degree. I note that volume increased this week to slightly above the average. It's the highest volume for 3, 4, 5, 6, 7 weeks. And on that volume, price hardly moved lower at all, just very slightly, which suggests that there is some demand in this market, but at this point in time, there's no intent to push higher. I won't be surprised if the market does attempt to consolidate in here again, as it has done previously and failed, but at this point, we'll just wait and see what the market does. It does certainly appear that the thrust lower is weakening, and perhaps the selling pressure is becoming exhausted. That'll still take some time to play out, but it looks far less threatening now than it did earlier when you got these widespread down bars as price continued to break down. This is the ASX industrial sector, and the price came up. It did challenge slightly the breakdown line above, and the market pulled back and respected that level quite well. This is where strength came in. There's some consolidation and absorption just below the important level being the breakdown line in the background. Price moved up after testing for supply earlier in the week. It's moved up, drawn out some supply from the left, which is what you would expect here, and price has come back to close right at the important level, the breakdown line in the background. I would expect a little test for supply in response early next week, and if selling pressure is found to be low, a secondary challenge to the breakdown line later in the week. This is consumer staples. We noted that there was probably some profit taking and perhaps sector rotation last week. Highs of the range up here. This is where the market's been using this sector as a defensive sector against the volatility on world stock markets. There was the lows of that range there. We saw the market pull back sharply and probably take some profit to move into some of the other sectors, which is suggesting that there's a little bit more positive sentiment in the market. And that continued this week with the market moving lower. I do note that volume was increased and slightly above the average, but spread narrowed considerably. So that suggests that there actually was some demand in the market, or a little bit more demand in the market than there had been previously. There was good support at this level previously, and that's where the market's moved down to now. So that might be why some buying support has emerged later in the week as price moved lower, because this is where the market was consolidating previously. All this trading here was consolidation in the background, and you would expect there would still be relatively strong demand at that level. This is the consumer discretionary sector, and it pushed lower this week on quite a spike in volume. That would appear that there was one stock in this sector that's really traded quite heavily. We'll just have to see what the response is to that next week. The price pushed lower this week on very high volume, and the market's closed back at the lows of the range, which is where you would expect it to go if there's serious selling pressure in the market, or at least in one stock in this sector. So the response is more important here due to the very high volume that was seen last week. If that's all done and dusted, you'll probably find that price will respond higher just slightly and close back level with this congestion to the left. If there's ongoing selling pressure, you may get a breakdown in response. So watch what happens in this sector next week. Early in the week will give you the telltale sign what's likely to happen. This is the ASX properties sector, and it stalled out a little bit after it gained some strength down here, pushed up higher. The breakdown line is way up there, so it's really just run out of puff here to some extent. It's begun attempting to consolidate. There's been 2 attempts to push higher, and supply has been drawn out both times, and the market has closed back at this level. I would expect a test for supply in response, at least early in the week, and then the response depending on how much supply continues to be drawn out. Just back to the parent index quickly. You can see quite clearly that the market's trading within the range of this previous up bar in consolidation mode, and this week was a quite volatile week really. Price tested for supply, pushed higher, and then encountered some supply, mostly in response to overseas markets and trading on overseas markets. We ended up with a mid-bar close right in the middle of that range. So there is still some volatility across the market, and I expect this market will continue to be quite reactive to overseas events and trading on overseas stock markets. Okay, thanks for your time. See you next week. See ya.